Good morning, money magnets and master traders. So great to see you all. I hope you guys are having a great Sunday. We got a new week coming up, and I want to help us prepare by giving us some cool pivot levels, some useful pivot levels and plans and setups so that we can attract some more money for our trading account. Now, looking at the daily chart of the SPY, we can see that the bounce we had around that 20 daily moving average last Thursday showed some follow through, and it went and hit the next moving average that I have at the 5 daily moving average. As of right now, I'm not fully convinced just yet that a bottom is in and that SPY is bullish again. It is overall bullish in the medium and long term, but in the short term, the bears still have a chance for a pullback. Now, you guys know how I feel about the 5 daily moving average. When we are above it, when the price is above it, Uncle is bull biased, and as you guys can see, the evidence when the price is above the 5 daily moving average, it has a tendency of going higher. But now we have a different situation where last Wednesday we broke the 5 daily moving average for the first time in a while as support, gave us that daily chart close way below it, which led to the back test of the 20 daily moving average as a support. But here we are from last Friday back testing that 5 daily moving average as a resistance. So the circumstance is a little different from what we seen in early September when we consistently tested the 5 daily moving average as a support. But now we got a test as resistance. What happens next, either tomorrow on Monday or Tuesday, is going to be very important. It's going to let us know whether to be bullish or bearish. So the same way I felt that when the price is above the 5 daily moving average, we want to be bullish for the short term. It's the same way I feel when price is below the 5 daily moving average. We want to be bearish for the short term. And that 5 daily moving average is around the 662-ish area. So as far as the bull case scenario goes, we need to clear 662 and recapture 664 to put 666, 667.3 or higher in play. However, if this is a true rejection from the 5 daily moving average, we want to see support levels fail. We want to see 662 hold as resistant and break down support that I now have. I changed my fib levels, but I now have it at 660.8, 659, 657, all the way down to 654.3-ish. And I did change my fib level, started from September 17th low, and I brought it up to all-time highs. So what happens tomorrow or Tuesday will give us a better sign on whether to be bullish or bearish. And my plan for tomorrow is that if we get back above the 5 daily moving average, if we recapture it, that's a false breakdown setup, and that is when I would be bullish and favor either all-time highs or set some new all-time highs again. Above 662 and 664, I recommend we go long, we go bullish. But if this is a true rejection, go short. If 660.8, 659 or 657 fails, and we should go and hit 654.3-ish again. Now around that area is a potential neckline. This is part of the bear case scenario. This could be the left shoulder, this could be the head, and we could be developing the right shoulder right now. Like I said, if this is truly the right shoulder, that 5 DMA must hold and break down support. Now the neckline's at 654.3. If we break that down, we'll be below the 20 daily moving average, and this bearish pattern can be a lot more bearish and send us a lot lower. So my trading principle as a money magnet is know the levels, know the setups, and trade it unbiasedly, and that's what I plan to do. You guys got my levels, you guys have my setups. Let's bring this home. Now, this is QQQ, looking like a naked chart here. I'm going to add my fib levels. So I'll start from September 17th low, and I'll bring it up to all-time highs. And here is QQQ going to barely testing that 5 daily moving average. Not quite as perfect as SPY, but it's telling a similar story. Now, I do have some levels on QQQ, which is 595.5. We can see that last Friday, QQQ recaptured that level. If there is bullish follow through, 597 and 598.5 must clear next. It gets us back above the 5 daily moving average, and that will be the bullish follow through I'm looking for to get us back above 600 and 603 to new all-time highs. But if we are to look to short, we want to see support levels fail. Once again, 595.5 would be a good start, but bears need to break down 594 and 592.6 as well. And if we break down those levels, we should go test 589 and break it down and send us even lower. Another $10 move down to the 583 to 580 area. I wouldn't be too surprised. So remember, if we clear 597 and 598.5, this is not just a relief bounce. This is a legit bounce back to the highs. But if we break down those support levels, 594, 592.6, this is just a relief bounce, and we're likely heading a lot lower. NVDA, we have an inside candle set up on NVDA. Let's try to keep this simple. The top of the range is at 180 with the low at 173. 173 to 180, anything in between is just chop and noise. You can trade it, of course, but I would trade it level to level. I wouldn't take the moves too seriously. But if you are looking for the bigger move, you want to see that range break above 180. We should head back up to new all-time highs. Or if we break down 173, we should be pretty bearish. I would be bear bias below 173. I would favor we go hit 168.8 to the 164 area. Here is Tesla. And boy, oh boy, did they give us a false breakdown setup. We had the wedge. It broke down last Thursday, but man, did it recapture. It also recaptured the 5 daily moving average. Watch that 5 DMA. As long as we're above it, the next target I have is at 440 and 442. If we clear those levels, 444, 446, 450, and I wouldn't be surprised if 460 area would be in play. Watch the 5 DMA. It needs to break back below it, especially the fib level at 426 for me to be bearish once again. But otherwise, Tesla's looking like it wants to fake some people out. IWM bounced off the 20 daily moving average, and similar to QQQ is barely retested the 5 DMA. If it is to be bullish and put in a low, a higher low, it needs to get back above that moving average, stay above 241, clear 242.5, and get us back to 245 or higher. If we do want to look to short, I need to see 241 fail first, but especially 239.5 and 238. If those levels fail as well, we are below the 20 daily moving average, and it should send IWM a lot lower, like a multi-day move to the downside. But above 242.5 and 245, I'd be bullish. Again, here is Apple chopping sideways a little bit, but it did manage to stay above the 5 daily moving average. So watch support there, 255 and 253.4 still. If bears want to get a breakdown, need to hit those levels and break them, especially the 250.8 level. You need to be careful, watch out for a potential M pattern playing out, but definitely bear bias below 250.8. However, if the bulls can clear 256.7, we can definitely go hit 258 in the 260 area. And last but certainly not least, here is the VIX. Big dump. It did hit that fib level around 15.25-ish. If it breaks down to 14 and 12.8, we go. I hope that's not the case and we can recapture that 16 level, but we'll see. Above 16, I'd be bullish again on the VIX. False breakdown setup, but if we lose 15.25, that would be bearish. But here's some extra levels for you guys before you go. Here's the dark pool levels. 661.77, 661.76, 1.4 billion in premium, and this one's 1.8 billion in premium. That's a lot of money. So I tell you this, use that level as the equilibrium level. That's based on the dark pool levels where the big money players are getting busy. If we are above 661.7 based on the dark pool level, I would be bullish, but below it, it could be pullback time. Yes, let's keep it that simple. Thank you guys for being here. If you guys found value in today's video, please hit the like button. I appreciate it. Subscribe, join the family, the community, the money magnetic community. I love y'all. Peace.